Hey everyone, Microsoft stock has rallied extremely higher in recent years, especially in 2023, as Microsoft benefited from the rising effectiveness of artificial intelligence, its investment in OpenAI, and their creation of ChatGPT. In this video, I'm going to answer where I think Microsoft stock price could end up in 2024. I'm going to look at several estimates and assumptions to come to this conclusion, but I'm going to share with you where I'm getting each of those financial metrics. So follow along and let's determine where Microsoft stock could be in 2024.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Okay, of course, when we're answering where the stock price could end up in 2024, where it's starting at is a good indication. So $372.24 is Microsoft's stock price as of this recording. Another assumption I'm going to use is Microsoft's price to earnings ratio. As of this recording, it's trading at a PE ratio of 36. I'm also going to include its forward price to earnings ratio, which is 28.88 as of this recording. All right, we also need to determine where Microsoft's earnings per share will be in 2024 and 2025. If we're making assumptions for the price, we need to look at the forward earnings estimate, right? Because if we're looking at the forward PE ratio, we need the estimate for 1 year ahead. So what I have here is the earnings per share estimates. Now, Microsoft is a little bit strange in that its fiscal year does not end at the calendar year. So its fiscal year 2024 will end in June of 2024, and then 2025 will end in June 2025, and so on. So I'm going to use its June 2025 EPS estimate and 2026 EPS estimate as the two earnings per share estimates for my valuation purposes. Now, it's not directly in line with calendar year 2024, but we're going to use the numbers that we have at our disposal. So for the fiscal year 2024, which ends in June 2025 for Microsoft, their earnings per share estimates are $12.96. Now, this is determined by a group of Wall Street analysts that follow Microsoft stock. They give their earnings per share estimates, and this is a consensus among all those analysts. And then for its fiscal year 2025, which ends in June 2026, the estimate is $15.35. Okay. So what I have here, I want to point your attention up here to the EPS for 2024, which was $12.96, and the EPS 2025, which was $15.35. So we're going to start with the base case that the price to earnings and forward price to earnings stays where they were at as of this recording. So 36 for the PE and 28.8. I rounded up to 29 for the forward PE. You can see that here, 36 for the PE and 29 for the forward PE. I've also included several different scenarios where the PE could be higher and the PE could be lower for Microsoft in 2024 and for the forward price to earnings as well. Now, one of the things that determines what investors are willing to pay for a stock is if it demonstrates economies in scale. Economies in scale is one of the most desirable characteristics you can find in an investment. In the example I have created here, sales grow from 100 in year 1 to $115.76 in year 4, while net income more than doubles from $4.50 to $9.47 in year 4. This company demonstrates economies in scale. As its revenue grows, its profits grow by a larger magnitude. Not every company can achieve this kind of effective growth. Here's how it works. This is a typical categorization of an income statement of a publicly traded company. Cost of goods sold is what's called a variable expense. That means cost of goods sold is connected to sales. Other expenses like interest, general and admin, and depreciation are not connected to sales. You can see here depreciation stays the same at 25 whether sales increase or not. The same is true for interest expense. It stays the same whether sales grows or not. You can understand your interest payments do not increase when your sales increase. Overall, businesses typically have a mixture of fixed expenses that are unrelated to sales and variable expenses that are. When sales increase, the business leverages those fixed expenses, as we see in this example, and profits grow by a larger magnitude than the increase in sales. That being said, Microsoft has definitely demonstrated economies in scale, with its operating profit margin rising to 43%, up from 32% in 2015. So it's clearly increasing its profit margin as revenue is increasing. Now let's go back to our valuation model. If Microsoft's PE was to stay the same at 36 and the company delivers the $12.96 in earnings per share it is forecasted to do so, the stock price could end 2024 at $466.56. Now, that would be a solid increase from the $372.24 it's currently trading at. Now, what if investors are more enthusiastic about Microsoft stock and artificial intelligence becomes even more popular in 2024? Then the valuation could increase to 40 from 36. That would increase the stock price to $518 per share. That would be a much more significant price increase. But what if investors become a little bit less optimistic about Microsoft stock and the hype dies down from artificial intelligence and the valuation falls to a PE of 30? Then the price could go to $388.80, which would still be an increase from the $372 per share. So there is some margin of safety built into Microsoft stock here at the current valuation. And the last scenario for the PE of 25 could decrease the stock price to $324 per share, which would be a roughly $50 decline from the current price. So if Microsoft was to hit its earnings per share estimate, in most cases, the stock price would be higher in 2024. But what if we're measuring with the forward PE ratio? Well, if the forward PE ratio stays the same at 29, then the stock price could rise to $445 per share. Again, higher than where it's starting at now. If the forward PE ratio was to increase to 35, then the stock price could rise to $537 per share, significantly higher than where it's at now. What if it was to fall to 25? Then that could mean the stock price could go to $383 per share. Again, it would still be above where it's at now, so there is margin of safety built in even if we're using the forward PE ratio. And finally, if the forward PE ratio was to decline all the way down to 20, that would cause the stock price to fall to $307 per share from the $372 per share. Again, in most scenarios, we have Microsoft stock price rising in 2024. Now, if you were to ask me where I think Microsoft stock price will be in 2024, I would say it would be in the range of $425 per share to $450 per share, rising from the current share price of $372 per share. And again, I have Microsoft stock rated as a buy going into 2024. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.